Hey traders, what's going on? Jamie Saettele here, SB Trade Desk Midweek Strategy Webinar. It's Wednesday, August 2nd, 2017. Let me know that you can hear me and see the screen, of course. Test, test, test. Please let me know that you can hear me and see the screen. Pete says all good. Okay, great. Euro right now, 118.60. Remember, the 2010 low is 1876. Don't forget that. And on that note, we've got DXY, the real long-term level here, or a long-term level to pay attention to at 92.63. So, not sure if we're getting some sort of a, kind of a final spike, if you will, clear out something. It's more of a euro thing for me. What I'm looking at with cable, as look at next. I actually, we're long, so I can envision cable actually going higher from here because of the setup. The euro just seems so overcooked to me, and that 2010 low is huge. So again, 92.63 is the 2010 low. As you can see now, 92.63 is also actually the low from August 2015. So there's more there. And then you've got 91.92, of course, the 2016 low from May of last year. So, we're kind of in this huge zone. I do think, the setup for me, obviously, you can try to catch a falling knife here by trying to maybe look for a euro short into 1876 or something like that. But ultimately, the big setup, the next big setup, is probably just going to be shorting a rally into the underside of the former, support line, right? Parallel. That's one of the best setups there is in trading, in my opinion, is simply that corrective channel, especially when it's acted as support before, like it did here. And this is a weekly chart, remember, and a kind of a snapback there would be a perfect setup for a short. Maybe it happens next week because you've got an intersection with this parallel here, right? The intersection with this parallel, which was perfect support back in May for last year's low in 2016. So again, that's just where my mind is at, with the dollar generally and the euro specifically. And then, the analog, again, this is from the special report, kind of says August could be sideways, something like that, sideways and then lower, which of course fits so well with the seasonal tendencies. Vladimir asking about nat gas and wheat. Yes, sir. We'll take a look at both. And then seasonals. So seasonals, DXY, right? Kind of a mixed picture for August. And if I do just run an actual, statistical thing here for you, you can see this is August, okay, the colored bars. And if we run the stats on it, 41 years of data, 46% up, so 19 up months, 22 down months, but the up months are larger than the down months. So you can see it's really a mixed picture, right? Kind of all over the place with DXY. So not one of the months that I'd consider to be like a real, um, a real strong seasonal tendency for August, excuse me. Now, if we do September, September is historically a really bearish month for the dollar, right? So, when you look at it that way, it actually makes a lot of sense that you could get this analog or whatever to do some sideways action, the dollar to go sideways or consolidate in August and then spill hard in next month. Let's see here. Where are we at? Euro 62, just kind of hanging around. All right. So that is the story with the dollar and euro, as you well know. 1876, not even a stone's throw at this point. 2010 low. Everyone, I'm assuming or presuming, I guess, is clear on what I mean by describing, the 25 line and 75 line, or what 75 line, excuse me, and 25 line, right? I talked about kind of at length in Sunday's post, but the last time we were up at this parallel, of course, was right up here, October 2014, and that really was the beginning of the accelerated portion of the decline in the dollar, or sorry, in euro, advance in the dollar. So quite the opposite situation now, of course, from what we had back in January. Eventually maybe you get up to 120, mid 120s on this. However, quite due for a pause, snapback, what have you. All right. So it's getting close. Maybe it happens during this webinar. I don't know. And, I'm not trying to short 1876. I want to see the market, pause, show some sort of a sign of a reversal before I just go and jump into something completely stupid. Okay. What about cable? So cable actually acting really well. And this is the setup that I talked about in yesterday's, Monday's post, which was the median line acceleration, right? So one of the things that's specific to median line analysis, pitchforks, analysis is simply the concept of acceleration around the median line. So one of the best examples of this was back in 2013, and we had a fork, of course, that was drawn, and you validate the fork after you show some action around the median line and maybe show that the angles within it are actually showing some sort of a influence. And sure enough, we hit the median line, pulled back, found support near the 25 line, and then we went up, accelerated through the median line, traded around it for a little bit, and eventually, obviously, the acceleration above the median line takes you to the upper parallel. Funny enough, this was actually, so if we look at this, I do remember this. This was actually August BOE in 2013. So literally exactly 4 years ago, right? Because BOE is tomorrow. So, I don't know, maybe we have something similar happen. Wouldn't it be funny if we actually did when accelerating from the median line on BOE 4 years later, just like we did in 2013? I remember this really well because I was trading pound at the time, and I was living in New York City at the time, and I put on a pound position. I got on the subway to go down to Wall Street. I get off the subway, and I open up my phone to check the quotes, and I see, when I left, pound was trading like down here, like let's call it 152.50. I get off the subway and I see the pound's like almost 300 pips higher. And this is over the course of like 40 minutes on the subway. I get out the subway, look at my phone, and I just got an iPhone, and I dropped my iPhone on the ground because I was so shocked to see 300 pips higher, and I smashed the screen on the iPhone. That kind of sucked. All right. Okay, where are we at? Euro 1866 on euro now, so getting close. All right. So yeah, you get the idea, right? So median line here, obviously it's been validated. It's a much more mature structure than we had back then in 2013, because you've got all these touches on it. Especially back in April and May when it was support, okay, and then we dumped, right? You had something about Brexit, Schmexit, whatever. Market finds support again, and the most recent low, of course, back in July is right on the 25 line. Rallied, failed near the median line, pull back, find a higher low, and we're back at the median line now. And it's just consolidating around the median line. And what that does is, it's building energy. To me, I kind of envision it as kind of sucking in all the shorts before it does its accelerated move. So the next obvious level on the upside, probably going to be up near 135. That's where you would have the 75 line, right? Now, of course, I would pay attention to at least this line, right? Because that was resistance. So tomorrow, that would be about 33.60 or so, right, for BOE. Eventually, though, the upper parallel would be in focus, and that's not going to be until, that's going to be up near, at some point, could be even near 140, right? So this is just kind of what I'm looking at, and the potential for cable to really accelerate higher. Now, near term, I hope you understand, how I'm looking at this from a median line perspective. It's actually it's a very interesting setup, a way to look at momentum in a market through a median line. Okay, near term. This is cable near term. Go a 4-hour chart. Okay, so we got the entry early in the week on, I guess it was Monday. Entry put out Sunday night to buy 131 because you had support there, right? We had support from the high volume level, which was 30.95. So I've learned to start putting my orders a few pips higher because the spreads on the new platform that I'm trading on aren't as tight. Anyway, you've got 130.95, so 131 was the target, or was the entry. We nailed it, and here we are, 130 something pips higher. Now, if you get an initial reaction lower on BOE, would want to see, 131, basically 131.60 hold support tomorrow. Okay, that's your key level, in my opinion. 131.60 for a near term, if you're trying to trade the position or you want to try to add to it or whatever, 131.60 is really where I would be paying close attention. 131.65 is a square root level here, okay? That level was essentially resistance back in late July at 131.58. So you can see that it's not just a square root level, but it's already been validated, right? We've already traded around it. So I would have that on your radar. And then, of course, this is the line to pay attention to. 33, 70 or 60 is what we said. Next square root level is 33.86. So we'll have these levels updated for you, in bold in tonight's update, but just want to go over it here and now quickly. Okay, Aussie dollar. I mean, there is absolutely nothing for me to say here other than stay long. Really, just stay long. Stay long, and we're at support here this morning, or I guess last night we came into support, but there's actually a chance to add to this trade too. So upper parallel should be support. It has been. You can notice too, this is another median line thing, and able to kind of go through these different median line tendencies or ways to trade with them, ways to analyze the market with them now that the markets are actually going into trends. It's the best time to use them. Right, we have the former fork here, right, which was we entered down here. Didn't really get a chance to add because it was just a straight shot. We went right through it. But you can see what's happening here. Every time we've come into the former upper parallel, we found support. That's a good sign. Also, adding the distance between the median line and adding the distance between the median line and the outer parallel here, and add that onto it, you actually get estimated resistance. So that's here. Estimated resistance is here as well. So if we close today, up above really 79.74, you'd like to see a little stronger close, of course. If you close up there, you actually have a chance to add to this trade. 79.74 is the latest high volume level as well on Aussie, right? You can see right here. This is on the futures chart, but you can see the high volume level. That was from that was FOMC actually, right? Because that would have been that hour. So that's FOMC on the 26th, and we've kind of probed it. Haven't really. I wouldn't call it. We say we've broken it, but if you can make a solid close up above that level, to me, add to the trade. Stops below today's low or the low from a couple days ago, and see if you can let it ride for even more. I do think that the obviously the dollar move is getting a bit silly. However, I think that's more. I think that's more, as I tried to highlight here. I think that pertains more obviously to euro, not necessarily everything. Some of the European currencies like NOK and SEK. And again, just don't forget, it's just still a big parallel up here, right? There's a lot of stuff up near 80, 81, and it actually is closer now to our target of 80, 90, right? And within the parallel on the uptrend, we actually have hit. This would be the 75 line. Okay, so we have hit that level, right? You remember that we came from the 25 line down here. So from 25 to 75, a beautiful thing, but chance to get a little more aggressive. At least, even if we got long today, say put an order in to buy it at 79.80, assuming we get a good close today. If your stop is 79.30 on the new position, 50 pips, you know what? You're still targeting. You still got 100. 79. You still have 100, 100 plus pips on the upside. So you'd still have actually a good reward to risk there. So that's Aussie. All right, Kiwis, one that I actually want to be short, and we do have that order in, and it might be triggered here soon. So do not forget we've got solid resistance for Kiwi up here, right? So the market's retraced half of the decline from the 2014 high, right? You've got a parallel here, lots of touches, right? It was resistance actually in June of last year. Then it was support for a while. It was resistance once in October 2016. It was big time resistance in February, and we're back at it again. So we did close on a daily basis. High close was 75.20, weekly close 75.10. So, we say that you kind of, it could be kind of a false break overshoot. Even if Kiwi is broadly higher, you can definitely envision us getting a dump back into the median line or even this parallel, which, was resistance back at major highs, okay, last year and in February as well. So the Kiwi setup, short setup, pretty simple here. You have broken, you get the long-term chart, but you've also already broken below the volume level from FOMC, which to me gives a green light or an objective, kind of a objective reason to be short. It's not like you're totally fighting it. And entry-wise, clean slope from a clean channel, right? Progression, of this, you can see hit the upper parallel, drop below the median line. Median line was resistance for a time, then was support on the way up after FOMC, and now you want to get a move up into that and sell it. And you've also got the horizontal levels here as well. So a clean entry is all we're getting at. The stop might be a little wide. Probably don't need it as wide as it is. You probably put it up here, but we'll change that after the close today. All right, so like that lower. Obviously, this plays to Aussie Kiwi on the upside, and we looked at that chart. I'm not going to go too much into it here. But yeah, we looked at that in last night's post, I guess. All right, did I show that in last night's post? Actually, I don't think I did. So let's look at it. If I did, I'm sorry for repeating, and if I didn't, here it is. So Aussie Kiwi came in to the 50% retrace of the entire rally, and important to me is the fact that it held the 200-day average twice, right? So again, already long Aussie, but might be short Kiwi here soon, hopefully. And if we get it, then we're short, long Aussie Kiwi. And I guess long pound Kiwi for that matter. Dollar CAD. I'm actually looking for the next dollar CAD short. So 126.30 to 126.50 has been the kind of on the radar, if you will, for a short position. And we're getting awfully close. High today is 25.92. And again, 26.30, 26.50. 26.50 is simply the low from June of last year, right? 26.30 is a square root level. Was support actually back on the 17th once you had that up day, rare up day. And yeah, that's about it. You've got median lines up here, right? This would be the center of the entire channel if you drew this channel from here. Now, I do think that the next support is going to be around 123. It's actually a little above it now. Vladimir, also Euro Yen. Yeah, you got it, buddy. You got it. We'll look at that too. Also, the trend line back from 2012, 13, 14. If you get below there, I mean, it's really in crash mode at that point. But I do think 123 finds some sort of a bounce, or provide some sort of a bounce. Either way, those are the levels to trade: 126.30, 50 to 123. So maybe putting a short in there soon. Don't forget, we've got all the data coming out, Friday, NFPs, but you also got CAD jobs, right? So Don't forget about that. What else? Oh yeah, I wanted to actually show you some of the seasonals for kiwi. So kiwi, August is historically really bearish for kiwi. Well, did I lie? I guess we've had some really big down months. We've had some big down months, but not as bearish as I thought. This is why statistics are important, because they don't lie. Yeah, 2011 we were down 920 pips, and then 2014 we were down 500 pips, and I had shorts with both of those. So I guess that's why in my mind I thought the kiwi seasonality was super bearish in August. So I'm kind of mistaken there because it's not really true. So it's good to check yourself. So never mind. Dollar CAD seasonals. You know, towards the bearish side for August. Nothing spectacular. 42 years of data, 19 down, 19 up, 23 down. All right, let's move on. Dollar yen. Put on a chart, excuse me, via Twitter here yesterday. We've actually come into a pretty big support area for euro yen. So this is log scale, first of all. That's important because it'll look different if you don't look at it on log. And you start with a trend line from the 2011 low to the 2016 low. And where we've been looking at this structure, as early as back here, because when we had that rally going on, it was so silly. I was wondering where it was going to stop, and it ended up stopping right at the median line. That actually validated this structure. It's not crazy to think that we could be in this for many, many years, right? So the next big low was found on a parallel that extends. It's not quite what would be the 12.5% line. It's a little above it actually. But either way, what it does is it crosses some huge levels. So it was initial resistance after Brexit. This is Brexit. After Brexit, recovery high. It was resistance in September, and it was resistance at the end of October. And then, of course, you had the election, which was here. That was the election. That day right there, broke above, and it was off to the races. Didn't really stop for real until the median line. We came back to the level, and it's held now every time this year. So April it held again in June, and so far it held yesterday. So that is why I do think it's important to take seriously this 5 waves up and look for, essentially a corrective dip, and you want to see support on the median line. Median line has been support before. It's also been resistance, and if you can get some sort of a bounce into this level, or a hold into this level, then it's a long. Okay, for how long, I don't know. I wouldn't be looking for anything crazy. Probably just be looking for a move up towards 1130, to be quite honest. That's the latest high volume level. That's FOMC. So that's FOMC right there. But if you can get, let's say you get down to 110, 15, 20, something like that, and you get a hold, and you end up getting into a long at 110, 40, stop, down below 109.90. You'd still have, at least 90 pips on the upside to look for here towards 1130. So I like that idea. Now, put the 2 and 2 together, with dollar yen potentially finding, some sort of a low, could be major, but confidence on the importance of the low is kind of lacking at this point. Seasonality is one. Seasonals tend to be pretty positive for the Japanese yen through September. Historically, you don't get the big low until October. Obviously, that's a secondary factor. Doesn't always work out that way. Yeah, so Kelly here, right on what I'm saying. I like the dollar yen move more to the short. You're liking it to 1130. Yeah, so you could have a couple setups here, right? You could get support on this median line, then get up to that 1130 area, and that would actually be a short at that point, right? The thing that I'm finding awfully interesting here, of course, is pound yen, because liking pound on the upside and potentially pound yen as well. I mean, let's go to this is the trend line, okay? We're above that trend line right now and holding the 13-week average on pound yen, which historically is a pretty important deal as far as a trend is concerned, right? In trends, the 13-week average is going to act as decent support and resistance, especially early on, like it did back here, all right? Got a possible head and shoulders continuation pattern. Again, your target on this, if it plays out, is all the way up in the 160s. Okay, that would take you above the Brexit high, which was 160.10. That was a spike high, if you recall, right after, right at the beginning of the whole deal that night. And, we were talking about early in the week where there was going to be support. This was the chart. Talked about it being at basically 144.74 because you had a parallel and you had the low day close there, 724 close. We did find support at 44.80. Here we are now. So certainly a valid longer term option here to play this. This is a closer up view, daily view of the trend line, right? That was Brexit. It was resistance back in December, broke through, big deal, dropped trend line. You can see this is a progression of potentially something extremely bullish in pound yen. So this could be kind of the shocker on the upside, right? Next big surprise trending move potentially. Maybe it gets its juice tomorrow with BOE. We'll see. All right, let's go to some of the metals, and then I'll go through some of the commodities that Vladimir had asked about, like nat gas and wheat, and euro yen as well. We'll get to some of those non-dollar crosses. Let's start with gold. Gold. All right. I'm pretty positive on gold at this point. For a bigger picture, breakout to the upside. This is the weekly. This is log scale. This is arithmetic scale. Arithmetic scale, you've broken trendline resistance. You broke it a long time ago. Log scale, you still haven't, but it's a very positive, action from the standpoint that this base has been so huge. Kind of annoyed because we thought we'd get 1180 on this drop. We didn't, and now we are, significantly higher, 70 bucks off the low from just 3 weeks ago, but did see the reversal. Gold, I would be looking for support near 1259 near term. So that's where, I see the first buying opportunity is 1259. Okay. You are a bit extended here, right, on this move. And if you think about it from the standpoint of Japanese yen, you could end up getting a push, basically getting a minor top and a dip. That would be the same as Japanese yen, dollar yen trading up to maybe 111.30 or so, right? And then rolling over again if that indeed is going to take place. So just, keep it simple. Basically follow, the slope here, continue to find resistance on the uptrend resistance. And, the best you can get, as far as I'm concerned, is a horizontal level, in line with a slope level, and 1259 does the trick. That could be, could be next week. We'll see. Silver. If we look at it on a line chart, you can see a pretty clean 5 waves up. And for me, I'd be watching for support on this magenta line because it was resistance, right? It was resistance back in late June. You traded around it here in late July. So, if you can get that, it would put you down maybe near 1622 or so, right? In line with the low on 1623 that was on, what day was that? That would have been 725. So that's level to watch, in my opinion, for silver. For a more important, or for an entry, I should say. Still have that spike, ended up being the low, the washout low, it appears, for silver. Crude oil. Light crude higher as well. Positive price action here. I actually like gas better, not natural gas, but gasoline. Now with crude, I'm not, I'm positive while above the low over here for the 724 low. So I'm not sure if we're going to get a deeper pullback over the next couple of weeks because of this. This was on the back page of today's journal. Granted, it is the back page. It would be more important if it was the front page, but you get the idea. Oil futures are flashing a buy signal. Typically, this happens towards an interim high or a short-term high, not a really important high. If it was going to be a really important high, it would be on the front page of the journal. But we've started to see this happen. So, any sort of pullback, I guess, we have had a minor pullback. I mean, we did drop from 50 to 48. It's a pretty big pullback yesterday. That might be it for all I know. But, I'm positive crude. I'm buying crude. I'm buying crude if we drop down here to 47 and change. All right. But yeah, I like it higher. I like crude higher. Those are the commodities. Well, let's see. And then we've got the Vladimir wants to look at a couple different ones too. Let me go through real quick. Let me go through just some of the crosses I wanted to. We already looked at pound yen. I want to take a look at Euro Aussie, Euro pound, and Euro Swiss. And then we will look at wheat, net gas, DAX, all that good stuff. All right. So Euro pound. Channels higher to get, which is what you want to see. To me, this rally is just super mature. I mean, watch for 90.04, basically 9004. Might coincide with getting, finally some sort of a pause, in the euro move, and I'll let the British pound take over, on the upside. So yeah, this is what I'm looking at, 90.04. Okay. That channel, I'm not sure if it'll be hit. It's already been hit here. You'd really like to see it not get hit and have a kind of a divergence, a lower ceiling, if you will, with euro pound. But that's what I'm looking at going into tomorrow. Euro Aussie. This is one we've looked at the last 2 days in the swing updates, and levels are pretty clean here, right? So we were looking at basically resistance, support at 47.07. More or less got that, and then potential resistance of 48.50, but stated that the better trade here, or the better idea, is probably actually to sell up into 49.19 or so, right? Why? Because that's 2 equal legs from the low on 7.19. So A, B, C, right? Even if it's something else going on, you're probably going to get some sort of reaction up there. So 49.19, and then the trend line resistance is closer to 49.50. So this zone is one that I'd be looking, or am looking, for a short. Again, that probably means more for euro than it does with Aussie. Just generally speaking, would be looking maybe at this at being the end of the really strong euro outperformance, at least for a little while. And finally, if we go to the daily chart, you can see you do have parallels here too, longer term ones, right? So you can see this parallel going off the high from May of 2016. And you can see that does cut through some price action here, right? And finally, Euro Swiss. So some of you might remember we looked at a Euro Swiss chart some time ago in one of these webinars. Someone had actually asked about it, and we decided to look at it, and we thought it looked super interesting. It was all the way down. I don't know. It might have been back here. Yeah, Mahai asking about Euro Swiss. Yeah, so we thought that it looked interesting because we could actually draw a slope on this, right? We had a really good channel. Surprisingly, we had a really good channel. I was on log scale with Euro Swiss, and we thought it looked bullish because of the action on it, right? So the action we thought was similar in that, we broke it and then we found support on the former resistance, and obviously it's exploded. So what now? Well, if you look at where the old channel was, that's going to be up about 116.50. Okay, so 116.50 for Euro Swiss might be, for me, it's an area to pay attention to. That's for sure. The trade here, there's always a couple trades, but 116.50, I'd be looking for failure up there, with the major resistance being up here at the channel top. Just it goes off these highs. That would be up in the above 119, close to 120 at some point. But if you do get a pullback at any point, either from here or 1650, watch for support on this line right here. Okay. Watch for support there. That was clearly support back in 2015 after the SMB debacle, of course. And it was also support in June of 2016 and September of 2016. And it held up, and then once you broke, you went to your final lows. So yes, I would watch for support here. That's going to put you, just above 112. Call it 112.25 or so. That's where I'd be looking for support in Euro Swiss. So yeah, an interesting, cross that's obviously been a little dead for a while because of the SMB's policies, but that certainly is not the case right now. This used to be a great cross to trade too, a long time ago. But it used to be a pretty good cross to trade. And, we might be getting back to that. So, back here, back in the day, 2004, 2010 or so, it was pretty good. All right, let's go to the questions now. I know that Vladimir wanted to look at a couple markets, wheat and natural gas. We'll start with natural gas. So nat gas, for the longest time, we've wondered if we're going to make it to that 260, 270. That's the original trend line from the 90s. And if you take that parallel to the 2012 low, it gets you some great action over here, including the low in February. So, that's your area right there to get really, really bullish natural gas, in my opinion. It's not that far away, right? If we look at it on say a 4-hour basis, if we want to draw something like this, probably going to see resistance up here, right? Pretty, close to the old low. Could be a little higher, but either way, I would watch that median line for resistance. It was support back here. You broke it, finding some support on the 75 line, just like there was resistance on the 25 line. So resistance should be probably around 287 and change. And ultimately your next low, down here somewhere, right? If you're going to make a big low, it's going to be down there. And that's because of this. So to Vladimir, I would give you two levels that would be good for trading here, and that would be about 280, 286, 287 on the upside for resistance, and eventually 260, 270 for support, potentially major support. Okay. Wheat. Let's look at wheat. So here's the weekly chart. Wheat, there's three kinds of wheat, first of all. Okay, you have Chicago wheat, Kansas City wheat, and Minneapolis wheat. Minneapolis wheat is spring wheat, and that was the wheat that rallied 32%. It's a better quality wheat. It's the kind of wheat they use, that bakers want, because it's got a lot of gluten in it. But that was up 32% in June alone. Now, as you can see, wheat's kind of fallen apart. If we're going to go higher, probably need to go higher right here. You can see that the median line of the entire channel back to the 2008 high. Okay, look at what this crosses here. Then you have a bunch of back and forth, but essentially it was resistance on the initial push back in February. Ensuing pullback found support, and here we are now right back at the median line. You also have a horizontal level, here basically too, going all the way back to May of 2015. And that same level was resistance in May of this year. So if we're going higher, probably needs to be from about like now, like right here. Okay, 460. Don't want to really see it below the median line. That would put wheat in some serious trouble. You can see the median line right here on a closer up view, right? Okay, we've got Euro Yen and then DAX from Mahai. We've got the two go kind of hand in hand actually sometimes. So Euro Yen. So back through 131, remember historically a very important level. Just based on the charts, remember this is one where we had, I have it plotted on here, I think actually. Yeah. So remember the 131 area has just kind of been a really big one throughout throughout history here in Euro Yen. You've also got, I guess you could extend it up towards 132, but you know, what's that? That's the January actually 2016 high. You know, you have an uptrend here. Okay, that's pretty clear. But you're going to see failure some point here. You're going to get a pullback. So, you know, knowing the trend isn't good enough if you're trying to trade it with any sort of size. And my guess, you know, at this point is probably 132 and change is probably your next major level. That's the September 2015 low. 32.28 is also the January 2016 high, right? And that's going to be on the next parallel. So that would be my best guess on where Euro Yen, one, is headed, and two, where it might actually see some sort of failure. You know, trading wise, I don't see anything for me to do here. Again, it's one of these that I see a setup in dollar yen. You know, dollar yen, we're looking at, you know, maybe a short-term long, before failure up to 111.30, right? And then, you know, I'll take it from there. Might be a short from there. With euro, I'm just looking for failure. I'm not sure if it's at 118.76 or what, but it's obviously getting a little out of hand. Vladimir saying, which target for upper par cross? I'm not sure I understand exactly what you're asking. Vladimir, if you could mind kind of clarify that, I'd be happy to you know, answer that question. If we look at, let's look at the momentum on euro yen though, see what that looks like right now. Oh, Vladimir saying, where is it headed to now? Yeah, well, again, you know, my next level for euro yen is 130, call it 132.30, okay? 132.30 is, again, that's the high from January 2016 and the low from September 2015, okay? So that's where I think euro yen is headed. Okay, and finally the DAX. So the DAX, the specific question specific question, and Mahia's got a really good question. But the specific question on the DAX was also from Mahia. He goes, do you think we have a low in place now, or should we have one more leg lower? Well, let's look at that from a shorter term perspective. Wave-wise, this looks actually complete to me. 1, 2, 3, 4, 5. Measurement-wise, it really doesn't look complete to me. Or it may not be complete, I should say. You'd have, remember, you have two equal legs down here at 12.031, right? I would watch specifically for a low on the here, because it's on the 20 or 75 line at 12.031, and that intersects on a Friday. Okay, that's what I would watch for right now. And then the question that Mahai had, he goes on euro pound. It's a really good question, saying, so if this is in euro pound, right? If we have this ending diagonal because we have an impulse down A, B, C, right? We're looking for a flat. You know, in which case, if you have a flat, it means you're going to drop below here. It means you're going to drop below 83. That's a huge drop, right? So the question was, what do you think is more probable, euro below 114 or pound approaching 140? Well, at this point, I would say it's actually pound to 140. And the reason is all the, you know, the median line analysis basically, right? That's kind of what I would say. You actually have the setup and the reason to think that you could have, you know, a surprise kind of shock move with cable. Whereas with euro, although I have it coming into this big resistance area at 118.76, it's in an uptrend. The thing's a train. And if euro does pull back, I'm not so sure that you're going to get back to 114. You might end up just getting, like, you know, this median line here, which crossed the election high. That might end up being where you go, okay? And that would put you probably, you know, in the mid 116s. So, you know, we're talking about a 200-point pullback or so if you do get it from here. You know, that puts you between basically the highs from 2015 and 2016, right? 116.15 and 117.12. So that's, you know, that's how I'd answer that question right now. "13-week average, eventually one would think that you get a tag there at some point. So anyway, yeah, I'll leave it there with that answer. That's how I would answer, or how I am answering that question. All right. All right. That's it for me, unless, well, actually, it is 11. I do have to run. That's it for me. So thank you very much, as always, for your time. And we'll get this archived ASAP for you so that you can watch it if you want to go over it, or if you're late to the webinar, or you just want to check it out and go through the analysis on your own. All right. Okay, everybody. Thank you very much again, and have a great rest of your week. Okay.